For Northwest MLS brokers, December ends with a whimper. And 2022 was a year of tale of two housing markets. Tale of two housing markets. What are they talking about? Talking about the first half of the year, January through, call it June, and then July, beginning of summer, July through end of the year. Yeah. Active market, crickets. Yeah, we had that big slowdown, right? That's what happens when you have a meteoric rise in interest rates, doubling interest rates in a matter of a pretty short amount of time. It's going to impact the market. This has caused a slowing in the housing market for sure. Let's jump on in. Let's see what the data says. Let's see how bad the damage is. Here we go. Last year was a tale of two housing markets, suggested broker Dean Rebhuhn in commenting on the latest stats from the MLS. The MLS report for December showed continued growth in the number of active listings compared to the same month a year ago. We're always kind of looking at year-over-year data. But sharp drops in the number of pending and closed sales. All right, that's because we didn't have much inventory going on and we didn't have much velocity of sales going on either. Last month's prices for single-family homes and condominiums that sold across the 26 counties in our system in the report, they dropped by just a hair over half a percentage point from 12 months ago, the year-over-year, marking the first year-over-year price decline since March of 2012. Going on 11 years now. And March of 2012, for those of you who weren't in the industry back then, that was kind of right before, that was midstream of the Great Recession. That really was. You're 4 or 5 years out from the beginning of it. We were still deep in the hole at that point. Started coming out of it kind of like more 2014, something like that. Then by 2016, we were off to the races. 16, 17, 18, 19, 20, 21. Pretty darn good years, right? Year-over-year prices for last month's sales of single-family homes and condos combined declined in 17 counties and rose in 9 counties. So you got a little bit of what's going on here? You got some small counties where if you have a few sales, it's going to impact the stats. But overall, you saw a decline. The median sales price was $570,000. That's for all of the counties involved. That's down $2,900, little over half a percentage point from a year ago figure of $572,900. Last year's median price overall peaked in May of 2022 at $660,000. So what you've had happen there is you had things go up. A year ago, you had things continue to go up, right? They kept going up and then they've since come down. So we are just now on that downward trajectory where we're going to intercept that kind of that point where year over year, you're going to start to see some big negative numbers relative to year over year. So this is when you start to see kind of the negative numbers being touted in the media, and people are like, I told you prices were going to drop. Well, yeah, but you got to wait for that, what goes up must come down kind of deal too. And so that's where we're at right now. The median price for single family homes, excluding condos that sold last month, was $587,500, down just a little under 0.5% from a year ago when it was $590,000. Condo prices edged up last month compared to the same month a year ago, increasing from $435,000 to $440,000 for a gain of 1.15%. So year over year, we are talking about very little change in pricing. Very little change in pricing. And a lot of people don't want to believe that. But you got to remember, a year ago, after that, it went up a bunch, right? So it has come down more than the stats are showing, but we just haven't had enough time to kind of, walk it out and see what it looks like. Rebhuhn, the broker we're talking about making these quotes, characterized last month's activity as good, considering the holidays. Yeah, you got holidays, you got snow, you got a rare Pacific Northwest ice storm. Yeah, that was crazy, wasn't it? Yeah, just the one Friday I remember at my girlfriend's house, and I left there and I was like, well, yeah, driving on a sheet of ice. I'm like, I don't think I'm going to make it into the office today. Today is a work from home day. I don't take those very often, but ice storm day. That was a good call. That's when you had all the cars that had no drivers in them going down like Queen Anne in Seattle. Just they would just start to slide because they're on such a slippery slope, and then they'd bang into another car, and that car would start to slide. Yeah, some epic video, right? So he noted there were about twice as many pending sales as new listings on average every day. We still have pent-up buyer demand and low inventory in the major markets. Yeah, because sellers don't want to sell, figuring they're going to have to put it on and sell at a lower price than they're expecting. You've still got pent-up buyer demand, even at, call it 6.5%, which is where we're at. And what a lot of those buyers are figuring is, hey, I can actually get in and get a house. And when rates come down, which they will, because this is an artificial deal, you dumped trillions, you dumped like $10 trillion into the economy between fiscal spending and monetary spending. You dump that kind of money into the economy. Yeah, you're going to have some inflation. Now you got the Fed trying to combat that with bumping up the interest rates. Now it's going to come down. It's going to come down. It's a matter of when. So you've got buyers out there who are stating, you know what? I'll buy now when there's a little bit of supply. I can get in. I can maybe get a building inspection done. I can maybe even negotiate. I can not pay 25% more than list price. You know, some of those things. Yeah, good deal. And then refinance when the rates come down. Or, you know, up front, you can do like a 2-1 buy down. Yeah. Talk to your mortgage broker on that. You can figure out a way to maybe have the seller pay some points so that you can get a lower interest rate. Just basically buy your interest rate down a little bit, make those payments affordable. And then when, opportunity comes along, you refinance into a lower rate. That's what a lot of people are thinking right now. Sellers accepted 4,000 offers from buyers, down about 31% from a year ago volume of pending sales. That doesn't shock me. What shocks me is it's only down 31%. It's down a lot, but the market was frothy. It was rolling, right? At month end, buyers could choose from 9,475 active listings, nearly 3 times as many as a year ago, when 3,240 homes and condos were offered for sale area-wide. But that was basically sold out. That was as close as you're going to get to sold out, meaning with the absorption rates and with as little inventory was on the marketplace, if not much else came on, it wouldn't take but a couple of weeks, 10 days for things to totally sell out. And oftentimes when you're looking at that inventory that's on the market, it's weird stuff. It's way overpriced. It's whatever, because otherwise it sells like that, right? The local housing market in 2022 ended with a whimper rather than a bang, stated Matthew Gardner, chief economist at Windermere Real Estate. Overall, the housing market is going to continue falling off the artificial sugar high. That's a good way of putting it. Or how about caffeine high? It was a function of the artificially low mortgage rates during the pandemic, he added. Think of those low rates that were held down because we had to close the economy, do crazy stuff like that. We didn't really have to close it. Florida didn't close. It seemed to be okay. Yeah. So anyway, we closed it. Large swaths of the economy were closed. Businesses were closed. Had to put all this financial stimulus into it to just kind of hold things together. Didn't want the country to fall apart. At least that's what we're told. You have all this financial stimulus come into the marketplace. It's going to impact things. And in those low interest rates, that's what was driving a lot of this because interest rates dropped. Remember at March of 2020, all of a sudden we started to see those rates drop. And all of a sudden, people are like, well, if I'm going to have to hunker down and work and have my kids, learn from home and we're going to have to work out at home. And if I can work remotely wherever I want, I need a new house. And so just years and years and years of real estate activity got packed into a couple. And that's what we're coming off of. And then rates drove up and now we're like, yeah, we have definitely impacted the real estate market, right? So, here we got Dick Beason from Remax. The market in the second half of 2022 was snake bit by high interest rates and lots more people becoming sellers who wanted to either pocket their large equities or arbitrage their gains into less expensive markets. People doing stuff, moving their housing asset around, right? He remarked, adding, in a span of 6 months, we went from 3% interest rates to 7% interest rates, and from 2 weeks of inventory to 2 months of inventory. That's going to slow things down. And you know what's wild is that 7% is still, I talk to the, people even older than me. I know it's hard to imagine. There's people out there that have been doing this longer than me. I started off in the 80s. I started off in the office in the mid to late 80s, and interest rates were higher than 7%. I'll tell you that. They were coming down off of 18%, and they just ratcheted on down. Every time we'd have a point or point and a half drop, we'd go through another refinance boom. And it was just crazy. But 7% back then, that would have been just all-star stellar rate. Here we are now bitching about 7% in 2023. But it's all relative, right? So you took 3% interest rates. Literally, I think it was the beginning of last week, rates were at 6.4%. And a year ago, they were at 3.2%. So they had literally doubled in that 1 year increment, right? That's going to have a little slowdown on housing. Now, housing was one of the main causes of all this inflation we've had. Real estate markets were on fire. And I think the Fed waited a little too long to implement kind of jacking those rates up to slow the inflation. They waited too long. We had everybody telling us, the inflation is transitory. No, it's not. It's still here, right? I mean, it's still here. We knew it wasn't going to be transitory, but that's what they had to say because it was happening on their watch. And they're like, it'll just be here for a little bit. Here we are months and months and months later. Nobody's talking about it because everybody's just, okay, everything's gotten more expensive. I haven't really gotten much of a raise, but yeah, this is just life. We're going to deal with it. So the MLS report shows about 2.1 months of inventory. Let's get back to that. So we talked about 7% interest rates. 2 months of inventory, that is basically sold out relative to what used to be considered a typical market, which was supply of 4 to 6 months. You got 4 to 6 months of supply in the marketplace. That's when you've got, a fair market for both buyers and sellers. We haven't had 4 to 6 months in forever. So some people are saying, well, that's kind of old school, Sean. You can't really even consider that. Well, we also used to consider a recession 2 quarters in a row where you had a decline in gross domestic product, right? GDP. I guess we're just reworking, definitions on everything. So, everything you learned about economics, forget it. We're on new terms now. So, but that whole generalization of 4 to 6 months, we're somewhere in between there would be normal, right? It's certainly 2 months of supply is not normal, but relative to where we have been, which was 2 weeks at the low point, it's a lot of supply. So buyers, if you've got buyers out there, now is a great opportunity relative to where we've been. It's all relative, right? Interest rates. Only 4 of the 26 counties in the MLS service have 5 months or more inventory, noted John Dealy, who added, the market has slowed due to rising interest rates and economic news, yet we haven't tipped to a buyer's market quite yet, which is reflected by 4 to 6 months of inventory. Old school definition. Can't go by that. Yeah, I still do. I still point to that just as a relative point, whether or not we've changed what the definition of housing, is relative to a normal market. You got to have a price point somewhere, right? So, economic news, that is another interesting thing. Just talked yesterday in a podcast on News for Reasonable People about Amazon firing 18,000 people. You got Twitter shutting down their Seattle offices. You got Facebook or Meta letting 10,000 jobs go. And that's going to have the ripple down effect. And by ripple down effect, I mean, there's a gym in South Lake Union. It's basically right next to where Amazon has its offices, and the gym owner had to close down. They're shutting down because they made it through the pandemic. They had enough money to get through the pandemic, but there aren't enough people going to the offices in these tech areas like downtown Seattle, South Lake Union, to fund all of the other little businesses, your delis, your gyms, your dry cleaners, that people in their work environment would typically walk to either before work, after work, lunch break, whatever it is. Those areas, because of work from home, are being decimated, gyms included. So that was sad to see yet another gym go down. In Kitsap County, where there's 1.78 months of supply, That's out to the west of downtown Seattle. Brokers added 172 listings to inventory during December, 70 fewer than the same month a year ago. Pending sales outgained new listings by 69 transactions. So, you've got much of the same throughout the area, depending on what your population is, depending on what your, business climate is, employment. Leach described sales as being off slightly, but said there's a lot of movement. We're seeing a lot of activity as folks reposition themselves to find a home and potentially refinance sometime in the future. That is what's going on. That is what everybody's talking about. Open houses were relatively quiet during the holidays. I'm being told, crickets, nobody going to them. People are kind of waiting until after the holidays, especially with some of the crazy weather we had, right? Leach reported attributing some of the fall off to weather and seasonal schedules. Agents are continuing to see multiple offers, and some sellers are making concessions to bring their homes to a close so that they can move on. I think a lot of people have, if they're at this point in the marketplace, they figured they missed it as far as being a seller. And buyers figure, wow, we missed our opportunity to get those really low interest rates. So right now we are in one of those periods where it's kind of a wait and see what's going to happen. All right, let's wait and see. That only typically lasts for a couple of months, unless you're in a major recession like the Great Recession, which was caused by housing and that really cheap money that was floating around and buyers buying that had no business buying with very little down. Market was so thin, there was no skin in the game. And then when it went sideways, all bets were off. And we had a lot of inventory back then. We do not have those same levels of inventory right now. And the economic differences, even though we're having some job loss, we are having that happen. 18,000 with Amazon. But how many people does Amazon, employ total? It's a very, very small percentage of their workforce, but it is happening. And a lot of that is happening because we had super cheap money in the form of interest rates. These tech companies, they went on a hiring spree because at the beginning of the pandemic, hey, everybody's buying from us. We can all work online. Tech just took off, right? And they had this money fueling them that why not? Well, now we've got a little bit of that hangover. We've got the sugar hangover, caffeine jitters from too much caffeine. And so we're working through that. How long is it going to take? I think you've got interest rates where they are. Call it 6.5%. I think yesterday they were like 6.4%. Don't quote me, but you can, because I'm not a mortgage broker, so I'm not held to that whole high level of don't take the quote from me. You know how typically when you talk with a mortgage broker, they're like, well, they're between, and they give a massive range because they don't want to commit because, they can't just pinpoint something and then have somebody come to them and say, you promised us. And they're like, oh yeah, no could do. I think it's going to be, you're going to have things start to get back to a little bit of activity in a couple of months from now. I think you've got a couple of months more of what we're experiencing now, which is sales volume way down on a lot of looky-loos, a lot of people out there kind of just seeing what it might look like to buy a house in the not too distant future. A lot of that going on. People getting pre-qualified, that kind of thing. Because after a while, people still need to buy homes. People either come into the area, they'll move out of the area, have another kid, retire, whatever it is. Life goes on, even though these interest rates might seem like, oh my God, this is horrible. This is horrible. What are we going to do? And you're going to hear a lot of people do the doomsayer. This is the end. Going to lose 45% of all the brokers out there. You're always going to hear that during a downturn. I know a lot of brokers that have had to go out and get second jobs. There's nothing wrong with that. If your business isn't to the point where it's going to hold you through this downturn, do what you got to do. Keep that brokerage, keep that license though. Summit Properties Northwest has an 80-20 split with 0 fees and a $10,000 cap. $10,000. That makes no sense. $10,000 annual cap. So it's a really good option. And we've had a lot of people come on board recently that, were at places that had, much more expensive platforms. And Summit, we've got a place that if you want to hang your license, more than happy to help. Slide into my DMs. Isn't that what I'm supposed to say? That's Instagram. You're on YouTube. All right. I think that's about it for me on this one. There's some other stuff, but I don't think we really care. You don't want to hear me drone on too long. That gets boring. All right. So anywho, hang in there if you're a real estate broker. It will get better. Now is a great time to be working on your marketing. We do Market a Minute every month for our brokers, meaning they come in and they sit right here in this chair and they talk about, I write a script from this very data that we just went through that they can summarize what's gone on in 1 minute. If you want to be part of that, hit me up. All right. That's it for me. Thanks so much for being here. I'll catch up with you in the next one. Bye for now.